Bitcoin Twitter commentator Plan has claimed that BX is the only asset that has a Sharpe ratio of greater than 1. The Sharpe ratio describes the increased rate of return received for the extra volatility sustained when holding a riskier type of asset. Risk versus reward. To understand the Sharpe ratio, one must take into consideration the returns of holding a risk-free asset, compared to holding a riskier asset with higher returns. In this case, a risk-free asset is considered something like a US Treasury T-bill, which is backed by the full faith and credit of the US government, along with the world's largest economy. The Sharpe ratio is the difference between the returns of the higher returning, more volatile assets when compared to the risk-free, much lower returns of a safer asset like US T-bills. It is important to note that Sharpe ratios only measure the returns based on the amount of risk, and the ratio doesn't actually measure the volatility of the underlying asset itself. Sharpe Bitcoin is the only asset with a Sharpe ratio greater than 1, return greater than risk. Classic asset stocks, bonds, gold, risk and return basically flat. Even fun, Facebook, Apple, Amazon, Netflix, Google. Not even close to BX. Note I skipped Bitcoin's first years, 2009, 2012, and updated data. Pic, Twitter.com/KZooToView, Plan, at 100 trillionus, January 25, 2020. Plan makes the case that Bitcoin has an extremely high Sharpe ratio compared to the returns on other investments in much more popular assets, including the FANG stocks, which have dominated the last decade. This is especially surprising when considering that Plan even skipped the first few years of Bitcoin's price history, when the fledgling cryptocurrency went from having a value of $0.83 to a high of $424 in 2012. Plan withheld the price data from 2009-2012 for his calculation. Taleb disagrees with Plan. You can read full post on CryptoFans News, link available in text below.